may I just hold on. evening, everybody. Sorry for the delay. Equity transaction. Equity transaction. It's a transaction between the parents and the NCI, whereby they sell shares to each other, but the parents never lose control. What do we mean? For example, equity. Parents has 70%. NCI will be 30%. Parents now purchase additional 20. NCI will reduce by 20%. Parent will now become 90%. NCI will now become 10%.
Hello, sir. We can see your screen, sir.
Oh, thank you. Can you see my screen now?
Yes, sir. Yes, sir.
What do we call equity transaction? It's a transaction between the parents and NCI, whereby the parent bought or buy shares or sell his stake, but no control is lost. Parent can buy. He has 70%. He bought additional 20%, 90%. NCI 30. They've sold 20, 10%. It can also happen in this way. Parents has 90%. NCI is 10%. Parents now sold 30%. NCI will increase by 30%. This will give us 60%, while this one will give us 40%. Don't forget, control is not lost. Control is not lost. The only thing is that part of his share is sold. All these are known as what? Equity transaction. It's a transaction between the parent and NCI. Now, let's go further. For example, let's take question. What do we do when we are in this situation? Let's take a question. Let's start with a simple one first. Please, Pepsi. Pepsi. I have sent the question to the platform for one period of time. Equity transaction. $68. Okay. If you go to basic question, initially, parents acquire 80% initially. He acquired 80%. He now said he bought additional 8%, making 88. Yes. What effect does it have on the account? Let we stop this simple question, then we move to something bigger just to test that. Okay. The same way you are consolidating or opening everything, Pepsi. See, Pepsi. Consolidated statement of financial position as at assets 1,000 plus 800 plus 500. Goodwill. Total assets. Equities and liability. Equities and liabilities. Share capital. Share capital. Retained earning. Liabilities. We have 600 plus 500 plus 200. Then after that, I will open the necessary account to balance it. That is, we have 2 more classes to go on normal accounts. We will now start SBR format. Somebody was asking me that for the week before tomorrow, I'll start sending it to the platform. Because we didn't know what will happen with these diets. Analysis of group structure. We have Sprite and Tango. Date of acquisition, DOA. Retained earning at date of acquisition. Effective interest. Oh, what am I doing? Effective interest, NCI, let's do it this way. Effective interest, NCI, cost of investment. Then after that, I'll go to the adjusted retained earning. We say adjusted retained earning of sorts. We have Sprite and we have Tango. Sprite, Tango, I'll determine the net asset of each one of them. I'll say determination of net assets. I'll pick it one after the other. As per SOFP. Determination of net assets. The first one, sprites. Item. Fuel. I'll go again. Determination of net assets of subsidiary. This time around, Tango. I'll open the goodwill account. So goodwill. In sprites and Tango. Cost of investment. Add NCI. Purchase consideration. Net assets at the date of acquisition. Goodwill. Take any of the parents. Take any of the parents. Or as per SOFP. That SCI open SCI account. SCI in sprites and in Tango. Good. This is it. After I open this, I will now start reading and be posting it. It's okay. Let's read. Yeah. First, Pepsi acquired 80% of Sprite. Pepsi is the parent. They acquire 80% of Sprite. Of filling the gap. This is the Sprite column, 80%, NCI 20%. When the retail earning was 25,000, the account is 3 zeros. Retail earning is 25. Okay. Paying cash consideration of 300,000. Cost of investment has it been recorded? Wow, 300. In exam, I check the non-current assets. What will happen to my mind exam? What will come to my mind? Two things. Don't forget that the parent is allowed to record investment at cost of fair value. Does it fair value this investment? I have not read further. Let's assume I just saw this. Because if it is cost, the cost will have been there, 300. What happened to the extra 26? Does it fair value it? Or if it fair value it, I know the principles. What is the principles? And as I say, fair value to profit or loss, or fair value to other comprehensive income in line with IFRS 9. If the fair value it, he bought it 300, but it's recording in at 326. Or if I remove the 300 for the goodwill calculation, The remaining 26, where do you put it? Is it profit or loss or other component of equity? If it is profit or loss, I mean P or L, I will go and debit return with 26 and credit investment 26. The question will tell me where you put it, the balance. So I said, okay, but I will confirm on the question, what is the situation? Okay. But the 300 for the goodwill calculation, I'll go to my goodwill. Cost of investment, 300, goodwill calculation, 300. Good. I'll read further. It is the group policy to mention NCR at fair value at the date of acquisition. The fair value NCR holding in Sprite at acquisition was 65. He has given me 65. To give me 365. Then NCI at the date of acquisition, DOE 65. Good. So far, so good. At the reporting date, Percy purchased additional 8%. Oh, purchase of other interest, equity transactions. Okay, no wonder. That's why the 26 he purchased. I will now go to the question. When he purchased, that means he's paying cash. I will now say effect. The effect of 8%, effect of 8% purchase of additional interest. Interest. We don't do effect. How much is the cash paid for the 8%? Question says 26. Has it been recorded? Yes. He has debited investment and credit cash. Good. When does he purchase it? At the reporting date. Okay. That's all. The amount has been debited to Pepsi investment is part. Pepsi acquires 5%. Oh, he has done with Sprite. Okay. Let me to be done with Sprite. What was the share capital in Sprite? I'll check. 200. I'll say, okay, this is Sprite. Share. 200. Return at the date of acquisition. What was the return? I'll go and pick 25. 25. The date of acquisition has given 25. So net asset is 225 at acquisition. As per SOP, what was the return of the parents and the two subsidiaries left filling the gap? Oh, this one is 100. Why this one is 200? What was the return of the parent? He said 391. Good. I will go. 200. 100 minus 25 will give me 75. Net asset at the date of acquisition, this is 300. Net asset at the date is 225. For the goodwill calculation, I can now calculate goodwill. 225. This will give me 0 or 140. Goodwill at goodwill 140 at the date of acquisition. That is it. That is the goodwill at the date of acquisition. Any issue? Any issue before we proceed? Any issue before we proceed? Any issue? Okay, the absence of no issue. That's okay, no problem. That is the goodwill. I can share post now. I say, oh, NCR will collect 25%. How many percent? 20% of 75. 20% of 75. What is 20% of share? Say share of profit now. Let's see how we collect 20% of 75. Hello? Help us, 20% of 75. I mean, the network is bad. 15. Huh?
15.
15, thank you. 15. The parent will collect share of profit for the parent home. For the parent home, say share of profit in Sprite. Sprite is going to collect 0.8 times 75. That one is 15. Definitely this one is 60. Good. I'll go to the next thing. Set. Let's say acquire 75%. Parent will now be 75%. NCI 25%. Retaining was 60. Retaining was 60. Paying cash consideration of 200,000. Cost of investment 200 for the goodwill calculation. As if you recorded. I only sold 165 instead of 200. What happened? Well, investigate further. The fair value of NCI holding in Tango was 50. So we have 50, giving me 250. Good. 250. Second leg of the 50. Second leg of the 50. NCI at the date of acquisition 50. Good. At the reporting date, Perry sold 10% equity interest in Tango for 35,000 naira. Oh, the cash proceeds has been credited to Percy Investment. Those things I told you in disposal. The cash proceeds has been credited. How come? Effect of selling 10%. Okay, you sell 10%. And that's the effect of 10% sold by the parents. If you are selling, you will receive cash. How much is the cash received? Say cash received. How much is it? Say 35. You receive 35. What is the value of the 10%? I don't know. Now said require. That is the end. I'll now go to the question. When does he sell it? At the reporting date. So not during the year. Very simple. So I'll go to mental set of Tango items. DOA, DOC, and POS. Good. Share capital of Tango. I'll go and check what is the share capital 100. Sure. 100. What was the retained earning at the date of acquisition? You have said 60. At DOC, what was the retained earning? This will now give me 160. I can now calculate the goodwill now and share POS. I now calculate the goodwill and share POS 160. 250 minus 160, that will give us 90. Good. Then, as per SOP, what was in the retained earning? 200. I'll come here 200. 200 minus 60 will give me 140. Out of the 140, you will collect 25%. 25% of 140. Twenty-five percent of 140.
35.
35. Thank you, sir. So this is the value of SCI 65 plus 15. This will give you 85. Now, let's share the parent. We'll now start the share profit now in Tango. You will collect 0.75 times 0.75 times 140. How much is that one giving us before? 0.75 times 140. If this one is 35 out of 140, that's 105. 105. Good. Yeah, be with me now. Let's talk. Be with me, sir. Be with me. Now, this is where it gets interesting. How do I say so? He sold at the reporting date. 20% is 85. At the reporting date, 20% of NCI is 85. They've now sold 88% out of the 20. Parent has purchased.
80, not 85.
Huh?
65 plus 15, that's 80.
Oh, sorry. Thank you. 20% of 80. Okay, this one will give us 85. Thank you. We'll have been looking for figure. 20% is 80. Out of the 20%, they now sold, SI sold, parent purchase 8% out of the 20. The only thing I can has tested about equity transaction for 5 marks, after a question, they say explain. For 5 marks, they've not bought a question on its own on equity. Okay. So, what will now happen? 20% is 80. Out of this 20%, they sold 8%. Just like we have done disposal, the same thing here. I will now say value of 8% will now equals to 8% that is sold over 20% times 80. This is the value. Out of the 20%, they sold 8%. That is the value they sold. Who sold it? SCI. That is it. Any issue?
Please, can you come again?
Okay, are we? Are we? Now look at it. What he's saying is this. He has sold 8%. Out of how many percent does he have? Out of how many percent does he have? I now expected, no problem. Initially, what is the value of the 20% NCI at the reporting date? Let's go and check. NCI, look at it here. 20% equals to 80. 20% equals to 80. Out of this 20% now, the value of the 20% is 80. These are the reporting dates, not during the year. 20% of 80. He now sold 8% out of the 20%. I want to get the value is sold now, the SCI sold, that the parent purchased. I will now say 8% over 20, that's 80. That I will now compare it to how much does the parent pay for the 8% he purchased. How much? Cash paid was 26. 8% over 20% times 80. How many percent does it give us? And what is the value? Eight percent over 20% times 80.
32.
The value is 32. I will now compare it. Is it a gain or loss to the parent? He paid 26,000, collecting a value of 32. Look at it. He's paying 26,000 for something of value of 32. That means it's a gain to him, to the parent now. Gain. Of how much now? 32 minus 26. That is 6. Good. How many, look at it, how many NCI will remain? NCI will remain 12%. What is that the value of the 20% that remain? 12% over 20% times 80. 12% over 20% times 80. What does it give us?
48.
48. NCI will decrease by 48. I will now say NCI, look at what he's saying now. I will now say decrease. NCI will decrease 32. NCI will decrease 32. NCI will decrease, but because you've sold 32, that is why you're having 48, the 12%. 48. Is the 48 I will now report. The gain of 6, look at it. 2 things to post. NCI to be posted in Sprite will now be 48. The gain of 6, we cannot credit retain any. Standard says, some textbooks say no, but what the standard says is that you must open other component of equity if he does not have other component of equity. If he has, I will add. He said it is only in loss and it does not have other component of equity, but it is there you can debit retain any. That is the standard. I don't know whether you get what I'm saying now. But again, I will now open other equity or other components of other components of equity or other equity component 6 for the day. This is what standard is saying. I will now open 6. This is what the standard is saying. So other component of equity we will now open it 6. If it is loss and it does not have other component of equity, I will debit retain any. Or if it is loss, but it has other component of equity, the other component of equity cannot take all the loss. I will first of all remove what is another component of equity. The balance will now go to the retain any. These are the guidelines laid by IFRS 3 business combination in accordance with equity transaction. Don't forget, control is not loss. Parent cannot sell below 50% in equity transaction. This is not disposal. Any question? I will now go to this 10% sold. Look at it. They are sold 10%. Who is selling? Parent. I will go to the net assets of the subsidiary they dispose. So, okay, you have 300. 10%, this 300 is between parent and NCI, the net asset. They have let's say we divide it into 10, 10, 10, 10, 10, 10, 10, 10, in 10 places. Parent is now showing part of his own in 10 places. If it is share proportionate, I will just say, okay, let me get the value. If it is share proportionate, See what I will do. If it is short proportionate, the net asset at DOC 300, that's the percentage, so 0.1, 30. But this is not share proportionate because NCI is also entitled to goodwill. I will go to the question, what is the goodwill of the subsidiary Dispositango? What is the goodwill? Where is our goodwill account? Let's see. Sorry. Okay, the goodwill is here. The
90.
goodwill is 90. 90. So the 10% sold now, I'll get the value now. And now say value of the 10% sold, value of 10% sold will now be 300 plus the 90 goodwill times 0.1, which is 39. That's all. I will now compare. Cash received was 35. Is parting away with 39. This is a loss of 4. This is a loss of 4. He has other components of equity that we just created, 6. NCI will now increase by 39. NCI will increase by, I will now come here and say increase slash increase 39. So 85 plus 39, what does it give us? This is 4, no doubt. 11, 124. So 124 plus 48, that's the NCI to be reported. I will now come here. I will now say 124 plus 124. Then the loss of 4. This will give me 2. That is the end of the question. We are done. 48 plus 124. What does it give us? 48 plus 124. 48 plus 124. Yeah, let's balance. 48 plus 124.
172.
48 plus 124.
172.
Oh, yeah. Oh, 600 plus 500 plus 200, 13. 48 plus 124. 48 plus 124. That's 0.72. Share capital of the parent, I'll go and check. 500. Then the retained earning. I'm going to put the retained good be 140 plus 90. What is the retained earning of the parents? 391 plus 60. 391 plus 60 plus 105.
Oh, cool, no?
556. 556. Yes. 556. So return is 556. 556. Then the goodwill. The goodwill is 140 plus 90. That is 140 plus 90, 30. 1000 plus 180. 1,000 plus 800 plus 500. 2, 3. 5,000. 500 plus 556 plus 2 plus 172 plus 13 to 530. That's the end. Any issue? Any issue? Any issue? Any issue? Any issue? Any issue? Okay, let's move to another question. That's more complex than this.
Excuse me, while you were solving the question, you kept on saying something about reporting dates and mid-year, as if the sale or purchase of the additional, either the disposal of the additional equity or the purchase, the treatment to be different if it's mid-year rather than end of
Very,
year, which
very,
was the
very,
reporting
very.
date.
Then
So-
this is the difference. If you go
Okay,
to
so is that what you
No,
want
no.
to consider in the next question now? Because you
no,
mentioned
that's
it
not
a
what I
couple
want
of
to consider.
times.
That's not what I want to consider in the next question. You know, where I believe that cannot be tested is in the question I sent to you now. If you go to Club and is it Club and Pep question is there. You will see it was during the year disposal. And if you go to cookies, biscuits, and the same thing, it was purchased during the year. The year. So, why I believe we should not bother about mid-year because especially when we dey dispose during the year, when parent dispose, it has its own technicality. But why no bother? ICANN has not tested all these things. In short, I was just teaching it for comfortability, just for real righteousness. Some people don't even take it because it's not area of concern to them. If I told you that they've not tested disposal before, they've not tested equity transaction before. They've not tested so many things. De facto has never been tested since we have been taking it. But whichever way, I've sent solution to you. But I want us to do what is reasonable that will also be useful, needed in other questions when they test. That is why on pick next question. But on Sunday or any other day we think big, I can also show you. Oh, if you go to solution, you will see it. They are there. I can also show you, but our advance, let's finish all the group and go to those SBR because all those mark I'm saying now
Yeah.
is SBR formats. SBR format. You don't want to ask this one, say it is SBR format. And you should explain the way they've asked. I think it's in 2019 or 2018. I will go and check. When you acquire a further interest, they ask, what will be the just an explanation to that they ask. But if you can get at the end of the year, you get it. It's not hard. You get it. Now, let's take Meccano, fireman. Meccano. If you look at these cookies now, let me read cookies for you. After maybe you can take one question on this if you want us to take it. For me, that's the purchase of land. The purchase was 20 years. The cookies was 20. I will not say it again. The purchase additional 5%, some percentage. Okay. Let's go to question 4. Meccano, fireman, and tiger. Meccano, fireman, and tiger. Question 4. Meccano, fireman, and tiger. Question 4. Meccano, fireman, and tiger. Let me share mine. I'm under pressure. Now, you look at Meccano fireman question. He said, Meccano 020, Meccano acquires 60% equity shares in fireman, a public limited company. The purchase company is comprised of 600 and at acquisition. But after those additional information, say on 30 November 2001, Meccano acquired a further 20% at the reporting date. He purchased additional 20%. I will open everything. Meccano is the parent. Also consolidated statement of financial position as at 30th November 20 as at 30th November 20 as its appearance, which is the Meccano PP. No current assets. PP is 439. plus 810 plus 620. Good. Financial assets. Is 08 plus 10 plus 20. Goodwill. After the goodwill, we'll go to the next, which is the current asset. Goodwill. So current assets. Current is 1060 plus 781 plus 350. Total assets, equities, and liabilities. Share capital. Total components of equity NCI. NCI. You have no current liability, which is 455 plus 323 plus 73. Current liability 274 plus 199 plus 313. That's all. I'll open everything. It's okay. Termination of net assets. The analysis of GS. We have fireman, and beggar. Date of acquisition. The other equity component and rate of acquisition. Effective interest. NCI. Then we have cost of investment. Cost of investment. Nice. Adjusted return. Adjusted of subsidiary. The first fireman. I'll say fireman. Date of acquisition. As per SWA capacity to acquisition. Termination. Termination of net assets of subsidiaries. First one, fireman. Items. Fuel. POC. And POS. I'm clicking determination of net asset for the tiger. So determination. Net assets of subsidiary. Tiger. Items. Fuel. Juice. POS. I need to calculate this. So, but it could be fireman and tiger. Could be fireman, tiger. Cost of investments. Add NCI. Purchase constitution. Net assets. Date of acquisition. Goodwill. Until any of the parents. So take any of the parents as per SOP. Then NCI. NCI. Environment and tiger. Date of acquisition. That's all. This is what I would need in case they ask me to open everything. Now reading and be posting. And post. Moderator and be post. Okay. Let's start. Let's open another sheet or buckets. Open another sheet. How is it? understand. This is the working. Okay. Nakano is a public limited company operating in the manufacturing sector. The draft sector of financial position as well as at 30th November 2020. On 1st November 2000, what happened? On 1st November 2000, on 1st November 2000, the government acquired 60% of equity shares of Fireman. 1st November 2000. He acquired 60%. NCI will now be 40%. The purchase consideration comprises of 600 million. Cost of investment 600. Has it been recorded? Or go and check. Has it been recorded? Oh, 820. No problem. For the goodwill calculation, cost of investment 600. Good. But on the fair value of non-controlling interest in Fireman was 395. I cannot write it too because he has not told me the group policy. Retain any of Fireman is 440. Until let me know what is the group policy. I cannot gamble it. If you change your mind to come. Fireman wishes to use such that they let me change it. Type error. Fireman wishes to use full good method. Oh, he has not told me. He wishes to use full good way. Okay. Now, the fair value of NCI now 395. This will give me purchase price 195. The second leg, I'll go and post where my mouth. 395. NCI 395. Nice. On 1st December 2000, the fair value of the identifiable net assets acquired was 935. Oh, he has given me the total net asset acquired. The total net assets. Say it's 935 in Fireman. All the net assets 935. So according to the question, the question says total net asset must be 935. Good. Date of acquisition. And the retail earning of Fireman was 222,299. 10 go and pick 299. Good. Another component of equity was 26. 26. That is. I'll go to the question. What is the share in Fireman? I'll go and put the shares. What is the shares in Fireman? Let's go to the question. The shares in Fireman was 600. Share capital in Fireman is 600. Don't forget he has given me retail earning to be 299. That's what he said. And he has also given me other components of equity, other equity components.
26.
Components to be 26. I will now add everything. Is it equals to 26? I will add. Is it equals to 935? I will add 600 plus 299 plus 26. Is it equal to 9355?
925.
does not equal to 90. I will now ask the question, why are you lying? The fair value of the net asset. I'll go and check. Why are you now lying? What is the fair value? What now responsible for the differences? Oh, you have said the excess in the fair value is due to not depreciable land. Valuation surplus on land. What is the figure?
Ten.
Oh, no, 10. The second leg of the 10. The second leg of the 10 plus 10. That's all. That is all. That is all. Any question? After I finish that, I'll go to the. You said on 30th November, which is at the reporting date. On 30th November, what happened? The Kano applied a further 20% interest in Paramount for a cash consideration of 220. Effect of purchasing additional 20%. It's okay. Effect of purchasing additional 20% interest. Cash paid. How much was he paid? Is 220. What is the value of 20% NCI? Will now equals to 20% over 40% times the value at the reporting date, which I don't know yet, times the value at the reporting date, which is not known to me yet. That's all. That's all. That is all. I will now go to the next one. Go to the next one. What is the next one? On 1st December 2020, Meccano acquired 80% of equity shares in Tiger. Meccano now acquired Tiger, and he acquired 80%. Parent 80%. NCR 80%. On which day? 1st December. This one is also December. 1st December 2027. So for a cash consideration of 541, cost of investment 541. The consideration comprises of cash of 47 million and a transfer of non-depreciable land at a fair value of 64. Oh, this is not post-acquisition effects. Asset base. This is not post-acquisition effects. A transfer land as part of the cost of investment according to IFRS. If an asset is transferred, it must be at fair value at the date of acquisition. Good. The employment goes assist with a value of 64, fair value of 64. The current amount of the land at acquisition was 56 at year end. This asset was included in non-current asset of Meccano, and the sales proceed has been credited to profit or loss. The sales proceed has been credited to profit or loss. Oh, what is wrong with that? So, two things is wrong. The asset it transfer is still with the parent. This is what they say they did. So cost of investment is 541. Yes, debit. He said cash is credit. How much is the cash pay? 477. He now said POL was credit. He said the sales proceed 64. This is what the accountant did. Debit investments. Now, what's supposed to be done? It's okay. Really, cost of investments, debit, 541. Cash need to be credit, 477. But the land is supposed to credit the POL with the gain on it, which is 64 minus 56. The gain of 8 should be credited to POL. And we will remove the land from the account again. Land, credit, 56. That's all. This because you cannot carry all the 64 to the accounts. It means the carry amount of the asset is 0. And you must deliver the asset to the owner to credit the PPE. Any issue. Before we now correct the entry passed by the accountants, this is the right thing to be done. I will now correct the entry after I've known the right thing to be done. After the right thing to be done has been known, I will now correct it. Who can do the correction now? Who can help us with the correction?
For POL, we had created POL with 64 before. Instead of creating POL with 8. So we have to reverse that difference. 64 minus 8 will debit the retained earnings of the parents with 64 minus 8.
Retained earning with 64 already. You are correct. When we now
Yes, we debit
retained
it.
earning, we debit this one with 56. It will left with what? 8. Do we agree? If I debit retaining with 56, I will now remove the class A land credit 56. It has become these two correct. Is the total money you put here should not go. It should have been debited by 56 to remain 8. They're supposed to be in the account. Because if you reverse it, you are still going to post 56. You are still going to post 8. So why not debit it 56 to remain 8 and remove the land? So I'll just go to the accounts and say, okay, land equal to the return of the parent is the return of the parent. And debit is account. Also, one consideration, this is debit to remain 8. As per S12P, what was the return earning? 10.
1066.
Yeah, is it? Thank you, my brother. Thank you so much. What is that? We'll go further. At the date of acquisition, the identifiable net assets of Tiger had a fair value of 526. The net asset, identifiable net asset of Tiger now. Tiger. See, the net asset must have 526. Good. Retaining we are 90, another component of equity we are 24. So the retaining is 90. Retaining is 90. Other equity component is 24. I'll go and pick the shares. They will not give you shares, go and pick it. It doesn't change unless there's a bonus issue. And I kind of not tested down. We cannot be killing ourselves over that. The share capital is 390. I will now pick return of 90. Another equity component of 24. I will now sum everything. I will say 390 plus 90 plus 24. Does it equals to 526? Does it equal to 526? Does it equal to
Sorry, maybe I'm missing something. This other equity 24.
What happened?
No, I'm just checking. We made an amendment because in the question is 45, I think.
No, that is a DOC. At the date of acquisition will be the note.
Okay.
That is the
They give us in the question.
Yes. They
It's in the
give you not
question.
additional information. They sometimes
Yes.
it's the same. A DOC, other component of equity, is now 45.
Yes, I mixed it up. Yeah, you are correct. It's under note 2.
45 minus 24, we have post of 21 to share. This is one of the trap that you must be careful of. In short, anytime you write other components of equity, quickly check. When I see the same, I will now ask the net asset. I take this and say equal to the net asset 390 plus 90 plus 24. Does it equal?
No.
Does it equal?
No.
390 plus 90 plus 24, does it equal to 526?
No, the difference is 22.
What responsible for the difference? You ask the question. Hey, why are you lying? He said you are saying 526. You will now ask, what responsible? Question will tell us. Let's read. The difference is 22. The excess in the fair value is due to non-depreciable land. The acquisition was accounted for using partial goodwill method in accordance with IFRS 3 business code. Oh, share proportionate. Share or proportionate. I will now say revaluation surplus on land. 22. I'll post the second leg of plus. Please, a minute. A minute, please. A minute. Yeah. Ah, yes, sorry, you're so pressed. So that is that. I've done that. I'll go to the next one. Said goodwill was impairment tested after the additional acquisition in firearm on 30th November 2021. The recoverable amount of firearms was 109, and that of the Tiger was 700. But there's a problem. Let's calculate our goodwill. What is the goodwill? What is the problem? The first one is fair value. The second one is share of proportionate. Don't forget, the goodwill we are derived using fair value. The goodwill belongs to both the parents and NCI. So for the cost of investment here is 541. Add NCI. Cost of investment is 541. NCI that will be added. What is the net assets at the date of acquisition? I'll go and add 20% of the net asset at acquisition.
That's 526.
Good. Five four one. 20% of 526, which is the net asset at the date of acquisition. This one is 935. Let's remove this. 526. 935. 935. This one will give me 60. This 60 belongs to both the parent because it is fair value. Now, 20% of 526. 20% of 526. Twenty percent of 526.
105.2.
105.2. 105. 541 plus 105.2. That will give us 646. 46.2.
646.
I will now remove the 526. Don't forget this goodwill belongs to parenting because it's share proportionate. So 646.2 minus 526. What is the goodwill?
120.2.
120.2. They now test for impairments. They've given us recoverable amounts. Let's go. I will now say test for impairments. To test for impairments, say test for impairments. Because impairment loss, subsidiary is a cash generating unit. I must compare the carrying amounts with the recoverable amounts. I will now pick the first one is fireman. And the second one is Tiger. What is the recoverable amount? The recoverable amount given, the recoverable amount is 1099. 1099. The third value standard is 700. I need to determine the carrying amount to know. Don't forget, impairment is done at the end of the year. It's because according to IAS 36, that impairment of an asset, goodwill, and some other intangible assets with indefinite useful life must be tested for annual impairment, even though there is indicator or no indicator of impairment. But every other asset where there is indicator of impairment. Now, the next thing, how do I determine the carrying amount? I will now say determination of carrying amount. I'll first of all take fireman. That will now be the net assets at the OC plus the goodwill because it's fair value. Let's go to the question now. I have not gotten my net asset at the OC. I will go and do. Okay. Fireman, what is the net asset? 600. Nothing happened to the retained earnings and SWP. I'll bring it down. 442. I'll bring the 442 down. 442. 442. There's no revalue for them. I'll go to the other component of equity. What is the other component of equity at DOC? 37. 37. I will now sum everything together. 600 plus 442 plus 37 plus 10. What does it give us? 600 plus 442 plus 37 plus 10.
1089.
1089. So I will now go there and say 1089. How much is the goodwill we have gotten? 60. Good. 1089 plus 60. That will now give me the net asset. 1089 plus the 60. 1089 plus 60. This is 9. 14. 1. 1149. I will now carry 1149. 1149. Has he impaired? Yes. What is the impairment loss? What's the figure? This is 0. 1099. 1149 minus 1099.
50.
50. Is it 50? Okay. Is the 50? Is the 15 here? 50 now coming. Goodwill, impairment loss. 50. So goodwill to be reported at DOC. 10. Don't forget they say after additional acquisition. So impairment in fireman now. In fireman will now be 0.8 times 50. Because it say after additional acquisition of the 20%. So out of the 80, 40 will go here. Because the question says after additional acquisition of the 20%, it went for impairment. Next. I have done that. I will now go to the what is the net assets? 390. 22. As per SOLP, I'll go and check what is the retained 169. I'll bring 169 in. I will now add everything. 390 plus 169 plus 45 plus 22. Three ninety plus 169 plus 45 plus 22.
626.
626. This is the net assets 26. Thank you. I will now go to the question. Net assets at DOC 626. I want to determine the carrying amount. Not say determination of carrying amount. Inside that. Net assets at DOC. What is the net assets at DOC 626? Plus the goodwill. But this goodwill around, it is short proportionate. It needs to be grossed up to get what we call notional goodwill. What is the goodwill of the parents? I'll go and get 120.2. I cannot add 120.2 plus the net asset I belongs to. I will now gross up 120.2 divided by 0.8 to get the goodwill, what they call notional goodwill. Notional. So say imaginary goodwill of the NCI. In short proportionate, notional goodwill. That's it. What is the notional goodwill? Is the goodwill that belongs to NCI in short proportionate. We always imagine it. 120.2 divided by 0.8. What does it give us? $120.2 divided by 0.8. What does it give us? Please help me, please.
150.25.
150.25. Thank you. This will not give me.
Okay, this would have been the goodwill for the entire for both parties.
Yes, now IFRS is
Okay, that
give
is
us
the notion.
formula. IFRS is give us formula. So you can say NCI percentage over parent percentage times goodwill of the parent to get the NCI goodwill of the parent. What is NCI percentage? 20% over 80% times 120.2. This will now give me goodwill of NCI. 20% over 80% times 120.2. What does it give us? What does it-
30.05. 30.05.
This is NCI goodwill. And I say 120.2 plus 30.05. It will still give 30.05. It will not give you the total 150.25. This is what was given in IFRS 3 syllabus. This is what he said. Or gross it up. Any of the two will survive. I will now add this 626 plus 150.25. What is it? This is now total net assets for both parents and NCI. Total goodwill for both parents and NCI. 626 plus 150.25. 626 plus 150.25, please.
776.25.
776.25. I will now take this to compare with the recoverable amount. I say 776. It's only fair value ICANN has been testing. 776.25. So 76.25 is the impairment. But this is for the total. I will now take parent portion of impairment. Parent portion of impairment. Out of 76.25 times 0.8. 76.25.
61.
61. 61. 61. The impairment. 61. $120.2 minus 61.
59.2.
Thank you, sir. But if you don't want to get it that way, there's other ways. You can still get impairment when it is short proportionate. You take it from the parent perspective. Say, okay, let me come from the parent angle alternatively. From the parent perspective, if I take it from the parent angle, what will happen? What is the net asset at DOC? Net assets. I want to compare recoverable amount.
526.
I want to compare the recoverable amount. What is the total recoverable amount? Give us 700. Out of it, 80% belong to the parents of the recoverable amount of subsidiary. 80% of 700 will give us what? 80% of the 700.
560.
560. I will now say, what is the net asset at DOC? To carrying amount now. Net assets at DOC, which is 626 times 0.8. 80% belongs to the parent. 80% of 626, what does it give us?
500.8.
500.8. Plus his goodwill. He has goodwill. He's the owner, 120.2. That's all. I'm coming from the perspective of the parent only. He's the owner of the goodwill. I will not need to gross up. 500.8 plus 120.2.
I 621.
61 is the carrying amount now. What is the impairment loss? If you see, give you the same thing as 61, you have gotten impairment loss. 621 minus 560, it will still give you 61 impairment loss if it's properly done, because you have followed the principles. But we don't need to do all this in fair value. No, at all. Why? Because the goodwill belongs to both the parent and NCI, and the net asset belongs to both the parent and NCI. Is the impairment of 61 now. the parent will suffer the whole impairment because it's share proportionate impairment. 61. Next, I will now go and share the post. Share of post now.
100.
Sure. 442 minus 229. 37 minus 26, that's 11. So minus 60 minus 1. 442 minus 29, please help us.
143.
143. So the total will now be 154. I'll now come here and say, okay, parents, share profit now. In fireman, I will only share 0.6 times 143. He has other component of equity where partial of his other components will go there. Then Tiger. In Tiger, let's go and share Tiger. 169 minus 90. 169 minus 90.
79.
79. So 80% of 79. 0.8 times 79. That is the end for parents. I'll now go to the next side. 0.6 times.
Can you go to the right a little bit?
Right.
No, sorry, for the net asset of Tiger.
Okay.
Okay. These other components, that gain there, that
Parent
difference.
has its other component of equity. Parent has its other component of equity. Parent has.
Okay.
Are you not getting what I'm saying? Parent, if I want to go and say, okay, 60% of 11, other component of equity. Parent has 60 plus 60% of 11, 6.6 plus he has other component of equity, 21, 80% of 21, or go there, 0.8 times 21, 16.8. That is it. Plus share of gain or loss in other thing outcome. This we have not known whether it's a gain or loss. So ICI 120.2. Share of profits is 0.4 times total. What is the total? Let's see. 154. 0.4 times 154.
$61.6.
Times 61.6.
1.6.
395 plus 61, 395 plus 61.6 is giving me 456.6. This is it. This is the 40%. This one is 100. 20% of 100, that's 20. No, NCR, the date of acquisition is 105.2. That is a good way. 105. 105.2. What do we have here? 105.2. 105.2. This is 125.2. It now sold 20% of this. And now say 456.6. This is what we are saying. 456.6. 456. 456. Yeah. 0.2, whatever. 0.4. Nice. 456.6. You now give me 228.3. Compare. He paid 220 to collect gain 8.3. Is the gain I will now take to you? Gain 8.3 plus. That's all. The next year will decrease. Next year will decrease in value by 228.3. So decrease. 228.3. Is half to see give me 228.3. Then impairment of 10. 218.3. 218.3. That's the end. 218.3 ICR plus 125 into 218.3. 218.3 plus 125 into. This is it. 218.3 plus 125.2. That will give me 343. 43.5. That is it. The share of profit we cannot balance. That is the end. You cannot balance result in 0.6 times 143. 85.8. Then 0.8 times 79. 63.2. I will now solve it. 1006 minus 56 minus 40 minus 61 plus 85.8 plus 63.2. 1058. I can now consolidate. That is the end of the question. 1058. 1058. It's here 1058. What is the share capital of the parent? 1120. 1120. Other components of equity. Other equity components. We have 60 plus 6.6 plus 16.8 plus 8.3, 91.7. 91.7 as it. Then non-current liability 455 plus 323 plus 73, 851. Then 274 plus 199 plus 313, 786. I will now sum. See, 1120 plus 1058 plus 91.7 plus 343.5 plus 851 plus 786. Does it give us? So please help me calculator. It's oh, this one is not 1058 plus that's now is plus 343.5 343.5 plus. Mr. Robert, what please?
We need to reconfirm 4250.2.
4250.2.
Okay, Bemi, thank you.
4250.2. This will give you 138. Then PPE, let's see, 439 plus 810 plus 620 plus 10 minus 56 plus 22. 1845. 1845. The goodwill, I know this one is 10 plus, let's go and look for the goodwill. 59.2. 59.2 plus 59.2. No, not even 10 plus 59.2, 69.2. 10, 1067 plus 781 plus 350, 2198, 2198, 9845 plus 138 plus 69.2 plus 218, 4250.2. As the end.
It's okay.
As the end. Sorry for the late 39.
Am I missing any? Okay.
Any question? Question? Can go through it. The same. In case you have any question, let us know.
Can you go back to the consolidated statements? The balance sheet.
So there what?
The consolidated statement of financial position.
Okay. Uncle. Let me post this thing. I will not forget. I'll put it in. I would have got- Okay, let me go to it. This is it. This is it. Let's go down.
It's okay.
Sorry for the late starting. Thank you for your time. I wish you all the best in the exam.